Welcome back. Now, in light of the upcoming budget, the South African Revenue Services is getting ready for a revenue recovery drive known as Project Billions. According to Tax Consulting SA, the initiative aims to collect more tax debt to help offset the loss of revenue resulting from the cancellation of the VAT increase. Head of Strategic Engagement and Compliance at Tax Consulting SA, Jashwin Baijoo, joins us now to provide further insights. Thank you so much for your time, Jashwin. Well, actually, I mean the effort of SARS trying to recover tax that is already there really has been going on for a number of years, even in the absence of the withdrawal of a VAT increase. How would you rate SARS in terms of its revenue collection muscle so far?
So last year, SARS ran something they called Project 1 billion, right? And it was a specialized revenue recovery program. And it did so well. I think they ended up bringing in about 42 billion from that program through 2012 ring-fenced audits, collections, things like that. So they've been gearing up to it, and factually, I mean, as then the market should have seen this coming. If you have Project 1 billion, obviously you're going to move on to Project Billions. But it's really a case of, over the last couple of years, we've seen them ramping up their collections and using a very targeted strategy. It's not a case of, kind of willy-nilly, but what happens is, well, final demands are sent out to an extent indiscriminately, and that ranges from 5,000 rand to 50 million rand. I mean, I saw a demand last week for 62 million. And that demand gives you 10 business days to respond appropriately. So they're giving the taxpayer that little bit of leeway. Now, historically, what would happen is, well, if you don't respond to the demand, you get a reminder, and then you hear nothing for a while, and then you get another one, and it's a process.
Yes.
But now that they've upgraded their systems and with their digital modernizations, they're able to better track it. So the moment it hits that 9th or 10th day, you're getting that direct email from SARS saying, well, listen, you didn't file a suspension, you didn't ask for a debt write-off, you didn't ask for a payment plan. So we are now going to collect. So that, you've got those 10 business days where you can say, listen, please suspend, I'm going to dispute, or I can't afford to settle it. Please, can we write off a portion? But once you go beyond that, SARS's powers of collection kick in. And that includes dipping into taxpayers' bank accounts without any authorization, simply because, listen, the final demand was your warning shot, and you did nothing about it.
I was actually going to ask about the consumer's power of negotiation here. Because, I mean, you get to that 10th day and, obviously SARS's powers then kick off. Does that mean that you have no power to still negotiate? How does that work? How does that give and take work?
No, so you can still negotiate, but when SARS's collection powers kick in, it simply means a senior SARS official can go down to the court and get a written statement stamped as a judgment, so you're then blacklisted. They can send instruction to your bank to attach funds from your account in satiation of the tax debt, but it doesn't bar you then from now negotiating a write-off. So there are various kind of tax debt relief mechanisms. One of them is a deferral arrangement, which is just an installment payment arrangement, right? You still pay the whole thing, so that's your capital plus your interest plus your penalties, but you just pay it off over 6, 12, 18, 24, however many months. And then on the other hand, you've got the compromise of tax debt, where you can then apply to write off the interest and penalties, a portion of the capital, and then make arrangements in terms of payment of the reduced settlement amount. But that both of these do hinge obviously on financial hardship for the taxpayer. With the payment arrangement, you've got to kind of show that the monthly amount is sustainable based on your current income and expenses. And while with the compromise, where you're basically asking for a reprieve and saying, listen, please, can we write off, let's say, half of this? There you've got to show that from a financial standpoint, It's uneconomical for SARS to pursue collection against you. And factually, like as for a company, as an example, you've got to evidence that if this entire amount is being claimed, the company may have to go into liquidation, in
Yeah.
which case, creditors like SARS will get 5 cents to the rand, whereas under the compromise, guys, we're giving you 30 cents to the rand. If you go the other way, one, cost of collections is going to outweigh the benefit of recovery, and two, from a fiscal standpoint, you're simply going to get less.
Yes.
Furthermore, well, if you force a taxpayer to stop trading, and it's the same with individuals. If you want to attach a motor vehicle, well, how's the individual going to get to work, earn a salary, and continue contributing to the tax base?
Yeah. Well, I mean, it sounds like a lot of consumers also, this is, I guess, maybe negligence on their part. And I'm wondering how much of a handle then SARS has on tax collection in the event of, criminal tax non-compliance outside of non-negligence.
So firstly, all non-compliance is criminal.
Okay.
So there's a couple years ago, they actually changed the legislation to say
Okay.
that, well, whether you willfully or negligently
Ah.
commit certain offenses,
Yeah.
they're deemed criminal. And an example of that is, well, do you know if you don't file a tax return, it's a criminal offense? Like you just missed it.
Mm.
If you incorrectly complete a tax return, it's a criminal offense.
What?
Whether you did it,
Yeah.
whether it was an honest mistake, whether it was willfully done, it's a criminal
Yeah.
offense. Not paying your taxes, criminal offense. So not updating your registered details,
Yeah.
criminal offense. So
Yeah.
so they've criminalized non-compliance to the point where anything anything can be deemed a criminal offense. And you've seen it probably in the last 2 years or so, where they are gunning hard on these criminal convictions, especially against
Yeah.
big names and big brands.
Yeah. All right. So, as someone then who's sitting in this position where I'm not really sure where I sit with SARS, what then do I need to do? Do I need to wait for SARS to come to me, or do I go to them? And what steps do I then need to prepare for that kind of process?
Yeah, so it's always recommended to be proactive rather than reactive,
Yeah.
because remember, there's different avenues. So as an example, with the voluntary disclosure program, if SARS has not come to you and you approach them first, you are then eligible for the voluntary disclosure program, which is used when you have omitted certain income or underdeclared. You want to make that correction, and it protects you from penalties and, to some extent, criminal convictions.
Yeah.
But if they approach you first, if they send you a letter of audit or a request for relevant material, whatever, it's no longer deemed voluntary, so that relief is no longer available. Then you have to go kind of dispute settlements, etc. So always approach SARS proactively, and depending how deep of a hole you are in and the extent of the non-compliance, it's always recommended to seek professional help. And the
Okay.
reason I say that is because I've had so many clients tell me, listen, we called the call center and they just said 6-month payment arrangement.
Yeah.
So they're not even fully informing taxpayers of the available remedies, let alone
Ah.
trying to do what is in the best interest of the taxpayer
Yes.
themselves. So it again, if you know it's a little problem, okay, fine, try and go it alone. E-filing does have a literal payment arrangement button for individual taxpayers where you have a small debt. If it's
Yeah.
like under 500,000 or so, very small stuff,
Yeah.
you can click that button and make an arrangement. But where it spans multiple tax types or multiple periods, or it's off the back of an audit,
Yeah.
because in the audit they can impose penalties of up to 200% of the tax, and that's not including interest. That's just 200. So you owe 1 million, suddenly
Yeah.
you got 2 million in penalties, and the Tax Act allows that based on a behavioral table. So when you're in that kind of messy situation, you usually want legal privilege in all your disclosures. And at the same time, when you're talking many millions, and you can kind of see that a good chunk of that's interest and penalties, you want a strong negotiation team to actually engage with SARS and get those penalties and interest written off.
Yeah, well, Jashwin, I can see how much pressure they're in on SARS, in terms of getting that tax collection. The fact that they went from Project 1 billion to Project Billions, really, and especially in a time like this where revenue sources are limited. So I hope that the viewers have definitely taken some insights in terms of what they can do going forward to protect themselves. Thank you so much for your time and for your insights today. That was the Head of Strategic Engagement and Compliance at Tax Consulting SA, Jashwin Baijoo.